Good evening, everybody. Okay, let's we got gold up here. We'll shift over to the Dow. All right, the little evidence or pieces of evidence that we wanted to kind of address is that when they banged this market down, they went from the top of the range down to the bottom of the range very quickly, and then immediately supported on the bottom of the range and started coming back up above the T line. Right now, what we can see is and this is just observe the obvious. The obvious is, look how indecisive it trades almost on a daily basis. And then on top of that, look how indecisive it's trading as far as the total trend. Now, this is a little sign that there might be some positive elements or investor sentiment starting to come back into the market. Now, obviously, it's been here before when it gets to the bottom of the range. But the reason that you want to look at all the indexes is what we can see right here in the NASDAQ. The NASDAQ been indecisive, but a slow, indecisive uptrend. However, notice what type of pattern we're getting here. That's kind of the handle. There's kind of the scoop pattern. But how did the scoop pattern get started? Kind of your message, then holding the T line and another gap up. So you've got the scoop pattern setting up. So with that, in I guess what do I want to say, in the analysis, that when you go and you look at the Dow coming up a little bit and you got the NASDAQ up much stronger, that's kind of makes you want to lean toward that on the positive side, or that the market's starting to move positive. Now, other elements like crude oil pulled back to the T line, did kind of a double top up here, but I am pretty sure where you're trading right here at this level where it topped out before. So a lot of times when this acts as resistance and then goes through, it comes back and acts as support. I want to keep an eye on crude oil to see if there isn't another leg up where they could take this up into about the $58 area. We recommended buying coffee, December coffee, if it came up through this level, which would have given you, notice you got a Morningstar signal. If it starts trading positive tomorrow, start looking to buy, especially if it goes through this level, because essentially you'll have your J-hook pattern. And your J-hook pattern, if you look at all the spots where it could move to, if you took this trajectory up here, you took this wave one and wave three, it all kind of comes to the same place. So it just gives you a little bit more evidence that that could be your next target, is up in this range. Been trading lean hogs. You can see what happened down here. Doji inverted hammer, bullish confirmation, bullish confirmation. It opens positive tomorrow. It's still a buy with the prospects of the lean hogs heading up to the 50-day moving average. And live cattle kind of did the stutter step here, and it's getting close to the first target of the 50-day moving average. The grains, nothing, well, cotton, not the grains, but nothing here to get excited about. And you can see what's happening in wheat. It's more showing up now as the potential of a bearish scoop pattern with a slingshot effect to the downside. At the same time, you've got soybeans slowly moving up. So it's kept up through the 200, and we're right here at this breakout level. Probably a buy if it breaks up through this level, but we're running out of stochastics. So this might be the range right here. And the dollar has been acting very strong. Oh, and we're going to be doing a session here pretty soon on wedge formation, which is very visible. Your wedge, pretty much this scenario where see how it's coming together, and then notice how they broke out. Your doji sandwich breakout. So usually this wedge, just like a big series of dojis, shows lots of consolidation, indecision, and then when they break it out one way or the other, it tells you which way that decision is moving to. And I show the wedge because I got one that's a wedge breakout potential in our list here. All right, so what's the problem has been, obviously, in the last few months is that we're just not going anywhere. So now it looks like with the doji gap up today in the Dow and this big gap up in the NASDAQ with a scoop potential, the positive trading from here could get us broken out through this level and give us a slingshot effect. And what's the evidence of that? Well, the scoop itself is starting with gap up, gap up. Remember, when they start gapping things up, that tells you they're starting to move back into these this trend with great enthusiasm. We've had things like Yard, which these are the ones that you want to keep in your portfolio where you've got just kind of a steady eddy. But the problem has been things like this, like Euro. Oops. That it started up and then it's backed off. So this was a one that if you started buying in here, you should have been closing out here because the evidence was it was closing back below the T line after it failed at the 50. So not that this was any particular reason to show this. This is kind of what's been happening in a lot of stock prices. If there's just no consistency, and that's all, again, kind of a reference to the market itself. So what we want to find are things that are good pattern setups. CENX, nice reversal right here. What can we see setting up? The J-hook pattern. This makes for a very simple buy, that if it starts trading above today's high and tomorrow's trading, what's that telling you? Number one, it's going to stay above the T line. Two, it's confirming this kind of reversal signal. And three, it's telling us it's breaking out through this level going into wave three. Again, that's just putting all the probabilities in the right place that you're buying something that has everything going for it. Not only going for it, but instead of us being in a sideways market and having seen something move this way or move very slightly this way, we know when we look at a J-hook pattern that if this is wave one, wave three is going to be probably about that same trajectory and same magnitude. So it puts you in situations where not only you're in the right direction at the right time, but your magnitude of return is going to be much greater. Still like RGC because it's got this big fry pan bottom, and notice where it kind of broke out right here at the 50. So very simple criteria. You just stay long on this as long as it stays above the T line. All right, I'm going to go through some here because what's happening right now is before there was a lot of things that were starting to show, inconsistent moves, that you'd have a good pattern setting up and then it would just kind of dissipate. So right now there's very simple strategies. For example, on PDS, you can see the J-hook pattern setting up. So where would be the optimal place to buy? Came back up through the open, because what would that tell us? If the profit taking was over, the J-hook pattern's in progress. If it came up through there, it's breaking out through that high starting in the J-hook pattern new uptrend. What about when it fills the gap? That's when you watch to see what type of signal you have there. Either if they fill the gap and it does a shooting star and sells off, that tells you what happened. They went up to fill the gap. If it blasts through, that tells you the fry pan bottom breakout is in progress. So the benefit of knowing what should happen coming out of a pattern is knowing what it should be doing. Either it's breaking out or you see that it's failing, you close out the position and go on to something else. Another J-hook pattern setting up. This is ON. And notice how this one got started with a little gap up today. So you had few dojis, a left-right combo. So the benefit, again, of the visual analysis of what's happening is being able to see what the signals are telling us and what type of pattern it might be confirming. So when you add those two things together, you get a little bit more insight as to what's happening in a price move. Cool broke out today. So we have a very simple entry on something like this. Notice the gap up. So something big has happened. Lots of profit taking during the day. But what's our simple rule of the doji? They open this positive tomorrow, you want to be buying because that tells you the profit taking is over and they're going to move it in the direction of how they open it after a doji. ACOO, same scenario. Anytime we see this doji big gap up move, usually you're going to see more follow through. So if you're trying to, if you're trying to learn all the candlestick signals and patterns, and it's kind of overwhelming at times, pick out one or two that if this occurs, what's likely to happen? A 45 degree. So that might become your strategy, is just trading one pattern or one or two patterns. Yes, you could be buying this one on positive trading. So we know what we should be expecting on positive trading. A J-hook pattern. So what's our first target? Coming up here to test this level. So what don't we want to see? It closing back below the T-line. So if it closed back below the T-line, what did it tell us about our J-hook pattern trajectory? It disappeared. Now we might be caught in a sideways downward trend channel. You close it out. I know they were discussing edit. Notice the slow curve fry pan bottom. There's kind of your double doji bullish flutter kicker. Closed above the 50 and above this level. I wouldn't be afraid to be buying this one on positive trading tomorrow for two reasons. I don't know why this is on here, but if it got moving from the $16 area anywhere up here, this area is going to be a 50% upside. So not only are we looking for price moves that look good or have good patterns to them, because there's a lot of good patterns out there, but if it works and it only moves up 6%, I'd rather be finding the ones that if it works, it's going to be up 50%. Another one that kind of a little trend kicker, and notice where it topped out today, just above the high over here. I'd still be a buyer of this one on positive trading, and especially be a buyer if it came up through the high, telling us that that we've broken out into new territory. So what usually happens, let me make this a little bit flatter. What usually happens on a breakout is if this was kind of the trend trajectory, this was the consolidation, and they break out, usually it's a fast move right back up into the trend trajectory. So we kind of watch for these type of things to break out because we know we could have a quick pop back up to the level that everybody else is watching that has been in that trend move prior to the consolidation. So that same scenario goes for Momo. Notice where it closed today, right here at this breakout. Where is this thing? This weekend. Oh, it's not on. This weekend's not on options, is it? It's the 2-day. It's the full scale 2-day training seminar, starting with the all the major signals, the patterns, the stop losses. Yes, it will be recorded. So this is kind of your this is kind of one of your bread and butter weekends. And this is where a lot of people that have already paid for it in the past come back and get a refresher, because nothing changes over the. Yes, you can retake it. Yeah, just let Abraham know. He'll look up and see that you retook it and give you the password to get in. But these are the reason we're doing this is that it kind of refreshes and gets you back into the mindset of what is the charts telling you, or what are the charts telling you, versus what is all the rhetoric that goes on out in the world when you hear all the prognoses of analysts and that sort of thing. Candlesticks cut through all that. It allows you to analyze what's actually happening. So we're going to be looking at all the major signals, all the major patterns, how to use them effectively as our entry and exit. And the reason I say effectively as far as entry and exit is because there's lots of good pattern setups. Like, for example, recommended COLL today. And it opened positive and started trading positive. What type of pattern would we have setting up? We have our J-hook pattern. The fact that it opened and immediately started pretty fast, started trading off, told us this wasn't confirming. We weren't getting what we expected. John, if you sign up for the webinar, yes, you'll get a password for the weekend. So, for those that have been even asked questions on the basics of which candlestick signals and patterns work the best, this is what this is the bread and butter type weekend that you want to participate in. I see you use stochastics. Yes, I use stochastics. I haven't put MACD on here because I don't use MACD. If you look at these charts, I got MACD on there because I can put them on as a histogram. I don't use them as an indicator. Because I can put them on there, they just become an added confirmation. But the important factor, or the important ones to use, are the stochastics and the price moves against especially the T-line. So here's fiber. Notice where fiber closed today. Right here. So we've got a wave one sideways move that if it breaks out, where do you think our next price move should be? Probably somewhere up in this trajectory, which would probably kind of correspond with heading for the 200-day moving average. Now, I say kind of correspond with that because if we can calculate this move here and this move up here, and that this is probably where, if this breaks out, everybody's watching to see if it heads to that level. We can see if it's going to head to that level, but once again, we've got the benefit that once it does get to that level, we can see what type of investor sentiment is occurring up there. So, oh, here's that wedge. This is the one I was kind of going to point out. You see kind of the wedge formation in here. You can see how it broke out. It's that little kind of series of dojis break out. So, and where is it likely to head to? Oops, that right. So we can kind of calculate where, number one, to make sure this is a worthwhile trade in the first place. Number two, once it gets up in this area, be a little bit more diligent as far as watching to see what type of signals or patterns or signals occur up at that level. Okay, so this is the reason I was using NSAM was because of this wedge formation. This is always a very high probability trade setup. So these are going to be the type of things that we want to visually go through on over the weekend and get everybody's eyes to kind of recognize them. Kind of the same scenario right here. We can see there's a nice little J-hook pattern. But again, we can also see you got kind of pshaw. Also kind of a wedge formation. So if it breaks out through here, now we've got the potential again of heading for the next target. So not that we say emphasize using the patterns of Western investing in Western investing community. We can use those to confirm what the candlestick patterns and signals are telling us. Because basically what we want to see is what everybody else is waiting for or looking for. But if this is the trend trajectory, then this, when it broke out, has the potential of moving very quickly to get back up to that level. So once again, if the market is moving very slowly, we've got the potential of watching the patterns and signals or breakouts that are going to produce much higher profit returns when the market really isn't doing all that much as far as the general market. TrueCar, look at the belt hold, look at the bobble, look at the breakout, and how did they break out? Did they gap it up? Another situation where got kind of a wave one, wave two going into wave three. So if this was a 3-point move, this should take you up into the $13 area. So these are the type of trends that you look for. You can see a trend, you see something break out, at least you know where your potential target is for that next move. That's on TMUS, SYMC. It's kind of your trend. Notice your little kind of cradle pattern right here. First target should be right here. Second target could be all the way up. Because why would we think it's all the way up here? Because if this is like a scoop type pattern, that slingshot effect could take you up into that area. Oh, how can that be? GVT. Same scenario. Notice our bullish engulfing. Notice what our trend was. I think there's more history to this. But we could expect it to kind of head back up into this area. So is that a significant move? Well, that's 6 points on a $44 stock, so it's about a 12-15% upside potential. OCLR, same scenario. There's the trajectory. There's your J-hook pattern. That could give you a good run up into that area. Another J-hook pattern. BV. Bizarre voice. And JCOM, this is why you pay attention to the kicker signal. The true kicker signal shouldn't have a tail to it, but you can see what happened. They came down, consolidated right to the T line and took it back up. So you've got a good 10% move on this after the breakout, which means you could get some more because of that kicker signal. Because right now, right here at this resistance level, there could be more upside to this one. And I say there could be more upside to this one. The probabilities of something big happening here obviously is based upon the kicker signal, and they keep gapping it up. Somebody's trying to get into this position with great enthusiasm, and that's exactly where we want to be trading. So here's that same scenario. When it started curling up, there was your trend trajectory. It's moved almost right back up into that, so you had a very quick move right here. So if you pick out just one or two sets of patterns based upon candlestick pattern itself or the signals, and knowing what the trajectory of a trend should be, whoops, at least you've got something to be trading at where you can learn it fairly well and know what your targets are and where your entries are. So again, one of the big benefits for me with candlesticks was that it let me know when I should be getting into a trade and when I should be getting back out of a trade. Oh, who wrote this one? Terrible handwriting. So if we're looking at something like this, we can see the obvious, that there's a trend channel. And notice all the things that we can use in our convergence analysis. Convergence analysis is just an easy way to say the more pieces of evidence that we can put into our analysis, like a left-right combo, right smack dab off the 50, stochastics curling up, a close back up above the T-line. This tells us this whole trend channel is probably still in effect. Where's our next target? Somewhere up here. So essentially, being able to see where the signals are occurring. And again, this is why we have the advantage of seeing what is the investor's sentiment. How do you know when to get in? If I see this opening positive tomorrow, what is this trading for? Closed at 36.08. Say I saw it open up at 36.20 and started up to 36.22, 24, 28. I'm going to be a buyer because that's confirming exactly what we want to see. I don't want to see it open here. I saw in COL, it opened, started up, and then immediately turned around and went the other way. What's that telling me? Telling me that the bulls aren't there. I'd rather pay up knowing that it's confirming my signal than trying to get in a few pennies early and not having confirmation. Left-right combo, can you have the same color of candlestick? Yes, there's going to be times where a left-right combo, now remember, a left-right combo is a doji, so your candle body isn't going to be all that important, because the body of the doji obviously is not going to be very big. And I'll try to show some. I'll have to find it. CM, a kicker signal is very simple. Anybody remember? Your best friend, though, is your doji gap up. I forget which ones they were. So this one, usually your best friend is a doji gap up and a bullish candle. there was others. This is your best friend. A doji followed by a big gap up. See STS to the downside. No, just that's bearish engulfing. I'll find you a kicker signal as we go through here somewhere. All right, so here's another good-looking chart. I'm looking around finding. Frank, it's hard to say which one's better. They all work. So, anyways, there's our J-hook pattern. And here is your belt hold signal. Now, whenever you see that belt hold, notice where this belt hold occurred. Practically right here on this support level was the bottom. And then a big reversal. It's been stuck in this channel for a while, but usually a big reversal signal like that might be a new element. So you just watch. If you're long or you start buying, just watch to see what it does once it gets to the top of the channel. But because of this signal, it's more than likely going to have some more additional force to it than just a reversal signal. Oh, here was the wedge. CRUS. Kind of see that wedge, or even this wedge right here, where it's all kind of coming to a point, but now it's breaking out to the top. That tells me we could have another move back up into that channel. Yeah, JCOM had a kicker, but the true kicker, as you can see, there was a tail to the downside on this one. Had this opened here and immediately headed higher after opening here and going this way, that would have been your true kicker. Now, it's still a kicker signal, but you prefer a kicker signal not to have this tail. But it still represents the same thing. The investor sentiment has dramatically been kicked in the opposite direction. We went long today on NVIDIA because it's got the little best friend, and you can see what the trend is. Make it smaller so you can see we're in a nice uptrend. You can see it's probably coming up, could potentially come up here into this range. So that's not a very big percent move, but for the people that were in the options room, instead of buying the November calls, we're buying a weekly. We're buying the November 4th calls, just 2 weeks out, for I think it was $1.52 for the 70/50s. Because if it pops up to this level in the next 2 or 3 days, that now goes from $1.52 probably up to maybe $6, $7 if it moves up here. So a lot of people ask what options do you trade. I usually don't trade the weeklies, only because I don't have time to sit and watch them that closely because I've got so many other things going on during the day. I usually buy the monthlies, but in this case, where the percent move wasn't all that great, and it looked like the next target wasn't too far away, the weeklies made a little bit more sense just because of the leverage. And I have J-hook pattern formation too. I lost my note, if it's okay. Okay, we'll get to a J-hook pattern here in a second, I think. J-hook pattern is a strong price move. Then it consolidates. Notice when it consolidated, it came right back to the 20. A lot of times it just comes back to the T-line. Then it does a J-hook. So it's basically a wave 1, wave 2, wave 3. But we know the calculation that wave 3 is usually the same magnitude as wave 1 and usually pretty much the same trajectory. So, so if this was a from 550 to 750 2-point move, 2-point move from here would take us up to 9.5. So percentage-wise, even if you miss this move, you still can calculate what your next move will be. Oh, I didn't do the biggies. Here's kind of a J-hook pattern on Amazon. Wave 1, wave 2, there's your bullish engulfing signal. There's your gap up, confirming the bullish engulfing signal, confirming that the T-line's not acting as resistance, and telling you this little downtrending channel is not acting as resistance. So we can kind of calculate what our next upside move could be. This move into this move. So if we know that's about the magnitude of our price move, now we've got a lot more opportunities to set up a strategy that's going to help us as far as our risk reward. If you're the type that can't buy an $840 stock and you're looking at options, well, we can figure out a lot of little option strategies, hedges. Is that a wedge? No, that's a J-hook pattern. A wedge, you would be able to see how the pattern is getting thinner and thinner. That's pretty much a scoop pattern, yes. So if you're buying this one, it's on the basis that this is kind of your handle. Usually you like a little bit flatter handle, but you can see what's happening because there's a scoop. So you're buying this one with the eye on the 200, that if they can't get through the 200, you come out of it. But if they go through the 200, you're probably going to have a strong slingshot effect. Oh, Elliot, we closed out the, and I was gone. I had it on a stop. Closed out the Amazon put spread on, I think it was Thursday, for $8.40. So I think we were in at 362 and out at 840. And if you, and the reason I did it was because I knew I was going to be gone on Friday. But even if you were in it on Friday, you knew with the stochastics down here toward the oversold area, and one day, or that Friday was expiring, as soon as it came back up through the high, if you still owned it, you closed it out, because that told you where they probably were taking it, back up to the T-line. On the short side, this is why you get out of a position as soon as it closes below the T-line. You can also see the wedge formation here, kind of here and kind of here. So you can see how everything was getting thinner. Then you had the benefit of seeing that they were closing below the T-line. And if you'd gone short, obviously you had a big percentage move to the downside. So, but the important factor of this one was as soon as it closed below the T-line, it was time to get out of this trade. So anytime you have something where it's starting to close below the T-line, your stochastics are starting to roll over, close out the position, and think about going short. As we saw in CWEI, we closed this out over here on this day because notice what it did. It did a hammer doji. So to stay in it, what did it need to do? It needed to open positive and trade positive. The fact that it traded positive and then closed below told us we had not only a doji type day, a shooting star type day, stochastics rolling over, but now we're ending this trend with a bearish engulfing signal. Pretty much tell who was winning, the bulls and the bears. In this case, with that bearish engulfing signal, it told us that we're not in an uptrend anymore. Time to close out that trade. So that is what you should have gleaned today from REN. Notice REN's had a nice uptrend this whole time, but every time it closed below the T-line, it was time to get out. Right now, we're up in the overbought area and a little evening star signal. We've had a bearish engulfing signal. Now remember, our criteria for closing out a position is a sell signal and a close below the T-line. So we had the sell signal, no close below the T-line. Now we had another sell signal, an evening star signal, and a close below the T-line. So with stochastics up here and seeing a sell signal, then seeing a second sell signal closing below the T-line, that should immediately tell you, just common sense-wise, that the bears are starting to take control, close out the trade. Somebody was asking that same thing on CL. CD, we went short, or recommended going short on this the other day. It was a little bit tentative, but notice what it did today. Another bearish engulfing signal. So if you aren't short, this would be a good one to go short tomorrow on any weakness. And where's your first likely target? Whoops, let's get rid of this. Down here at the 50. Now, that could be, oh, Bob, that's your bread and bricks and mortar. One of the 12 major signals is your evening star signal. The opposite of a morning star signal. I'll see if I can find another one. Anyways, this one you can start going short on weakness tomorrow. We have been short this one. Again, notice we could see the trajectory rolling over and closing below the T-line. And how long do we stay short? Until we see a buy signal and a close above the T-line. However, we're down here in the oversold area. We're going to be a little bit more diligent as far as watching for any buying strength here. And G-Pro, there's kind of your kicker type signal. Let's make this bigger. Notice that it opened here, closed up here, green candle. The next day they opened it at or below the open of the previous day and went this direction. So we've got a kicker signal telling you the bears are definitely taking control. And where did it occur? Right smack off the 50, back below the T-line. Where do you think the next target's going to be? Probably down here, or even lower, because if this is your bearish J-hook pattern, wave 1, wave 2, this was 3.5 points. 3.5 points from here would take you down into the $11.50 area. So there's your first likely target. Once it gets here, we just watch to see what type of signals occur at that level. We've been short SRPT. Once again, notice where was the first telltale sign to start watching for sell? Notice how they gapped it up and did a doji in the overbought condition. After that, there was nothing. Then we had a doji, strong selling. That's when we went short, because where's our next likely target? Down here at the 50. Now, there was another one. What did I just do? G-Pro? No, Shaw. Which one? CLTD. On something like this, this could be your potential target. But you can put your Fibonacci numbers on here, because that's what a lot of other people are going to be watching. So once you put your Fibonacci numbers on, you can see whether this is the support level, this is the support level, or if this is the support level. Now, it might be that this level and this level in a few days coincide. It's not that we're aiming for that area. What we're looking for is, once it gets to that area, what type of signals do we see? If we see a hammer signal or a doji, we can think, all right, if it confirms tomorrow, that's where everybody's buying when it got back to the level that everybody else was watching. EXEL, The bigger the signal, the more compelling your trend is going to be. So this one, as you can see, has been in a downtrend, hasn't been able to get up above the T line. It looks like it's doing another little rollover, so that might mean if they start trading this off. Now, this is one, I think, one of the biotechs, and the biotechs are getting sold off pretty hard across the board. FTK came up, failed at the 50. Now, is that really that crucial? Well, number one, it's telling you that it's failed at the 50. Number two, you can pretty much, where is it, trend? Draw a line right down through, kind of through the tops. It's telling you that they failed up here. They're still heading down. Where's the next likely target? They could be bringing you back down to the 200-day moving average. So we visually can see what everybody else is watching for to see what's happening. And we can see where the sell signals occur. There's our bearish Harami, followed by a confirmation. And where did it do it? Number one, it did it right here at the 50. Number two, right about the same level it topped out before, so they couldn't get up through that level. But where's our next target? Well, it could be down here, or it could be coming down into this trend. So basically what it tells us is there's a big enough percentage move to go short here, but even if it came down here, that would be a good 20-25% potential profit on the short side. Newlink, another biotech. Where did it fail? Now, look at the pattern. A nice fry pan bottom, and it broke out. What type of percent move did we get when it broke out? Went from 11 to 16, so we had a good 45% upside. But this is why I say we can see what happens once it gets to a resistance level that everybody else is watching. First, it failed. Pulled back. It didn't close below the T-line. Went again. What happened the next day? A bearish Harami. What's the bearish Harami tell us? The buying has stopped, so that's where we take our profits. Now, notice the next signal it did, that bearish doji sandwich that closed below the T-line, telling us we want to be short. And where's it likely to move to? I would still look at the 50, but I would do the same thing. If this is our absolute bottom and this was our absolute top, it's almost back to the 38% retracement. There's a 50% retracement, and there's a 62% retracement right about where the 50 is, 50-day moving averages. So essentially, we can put things on our chart and tell us where is, but bearish Harami is most significant in overbought condition. Yeah, and that's where it is. We're in the overbought condition. The bearish Harami right smack dab on the 200. That's got all the elements for telling you that was the target. Overbought is when it's above 80. So it's up here above 80, the bearish Harami. And things like, to analyze what's going on in an industry, like in Nugget. Whoops, let's do it this way. Nugget started showing some bottoming action. But anytime we start seeing buying, what do we have to account for? What do we have to watch for? That. To see what is the trend doing, and where would there be a resistance level in this trend? Well, if you can pretty much draw a line right down through the tops, there's a resistance level here. So not only do you need to see buying, where's your buying going to go to? Watch to see what happens once it gets to these resistance levels. And if it gets up here to the resistance level and can't get through, what's it tell us about the trend? More than likely, it's still in a downtrend. All right, these are just kind of a little simple analysis. Again, because candlesticks are basically the graphic depiction of what's going on in investor sentiment, we can make some very simple assumptions of which way a trend is moving based upon what signals are we seeing and what type of pattern do we have setting up. No, that's not a kicker signal. That's your kind of your morning star signal. That's your evening star signal. Somebody was asking what is an evening star. An evening star signal is a big day, a day of indecision, and the third day closes more than halfway down this candle. That 3-day combination is your evening star signal. Have kind of a down day. It's not really a morning star signal, but it's got the same elements. You have a down day, a day of indecision, and the third day closes more than halfway up this candle, and you're in the oversold area. That's your morning star signal. So again, there's 12 major signals, 6 buys and 6 sells. Let's see, it's WLH. That's more of what we call a flutter kicker signal. So if we know, again, there's your best friend signal, a doji gap up. If we know that a kicker signal is a bearish candle, opens here, closes here, the next day they open up positive, start trading at positive. Except if that positive trading that day when they gap it up is a doji type day, what do we know about the doji? That it's usually going to move, the prices are usually going to move in the direction of how they open after a doji. So if they open up positive, we can be buying immediately because they know that they're going to be moving up positive after a doji. So when it moves positive, we call this a flutter kicker signal, because if you took this little flutter out of here, basically you've got a kicker signal, which is one of your strongest signals. Okay, so right now there are a bunch, I'd say a bunch, there's a few, we're not seeing the same proliferation of good patterns. Usually with showing this amount of charts as we've seen tonight, I've had to cultivate it down from another 100% more, or even more than that. But right now, what we're seeing is pretty much all there is out there right now as far as good patterns. So that one's needs more confirmation. But we can find things that put us in the right places at the right time. For example, on Momo, if it opens positive tomorrow, I would suspect the next move is going to be a quick one. Could be up a good 25% on a breakout. Oh, Nugget. Nugget, as you can see, has this downtrend. We saw the buying come in, but even though you have buying coming in, you've got to account for what's the overall trend. In this case, the overall trend in Nugget, as you can see, you could draw a line right down through the tops. So you're in a downtrend. So if this opened lower tomorrow, what was your next price target? You could probably pretty much draw a line down. That's not great, but probably down in this area. But that's going to be a function of how gold trades. You can see what's happened here in gold. Came down, broke through the 200, came up, it's tested the 200 and is failing, so it might still be heading down further. On Momo, probably I would be putting it at the 50% level because this is the candle that told us the bulls were in control, that if they broke out, we got a strong move. If it opened positive and closed more than halfway down this candle, that told us two things. One, it wasn't breaking out, and two, back below the halfway point of the candle that told us the bears or the bulls are in control, the bears are probably back in control. So I'd probably I wouldn't want to see it close more than halfway down this candle. On the other hand, I wouldn't want to see it trade at all back below this level. If it opened up and they could sell it all the way back down here, obviously there's not any buying strength there. You want to close it out. Okay, are there any general questions on candlesticks? Now, a lot of the general questions you're going to, if you're fairly new and you want to go through the 2-day training program, again, that is kind of your bread and butter for for learning candlesticks. Once you see everything in a chronological order and understand what the psychology or the rationale is for making using candlestick signals, it becomes a lot more clear of what you should be looking for. I notice that you frequently point out wedge patterns, but not head and shoulders. I don't see as many head and shoulders, Frank. Cup and handles are out there. But no, we only did the wedge because I'm doing a training video on the wedges. But the wedges are a very viable formation. For example, saw the wedge here in the dollar when it right before it broke out. So if I see a head and shoulders, I'll point it out to you. But usually, I was trying to think, I don't come across them as often as. And the cup and handle is pretty common. But it's usually a function of seeing a fry pan bottom and then a little J hook at the end of it. All right, any other general questions on candlesticks? After super extreme move like STS, do you still expect a 45 degree and move it in that direction, or expect some bounce first to relieve the severe overbought condition? Oops. Or oversold condition? Yeah, usually if I have something like this, and usually I'll have something like this on the, if I'm trading soybeans, or I will stay short until I see the first signs of buying, which might be a little doji. Now, this is on a daily chart. If this was a 10-minute chart and I had a big breakdown like this, and the next signal was kind of a little hammer and it started trading positive, that's when I'd take my profit, because that told me that was the area they were starting to bounce it a little bit. Do you hold through earnings if there is no sell signal prior? It all depends on what the signal is. I know that AKS is announcing their earnings tomorrow morning. It wasn't real strong on the close. So if I own this one, I would have sold at least half, if not all of it, with the idea that once because at this point there wasn't a lot of buying going into the close. So if they're coming out with earnings tomorrow morning and they were kind of selling going into the close, that doesn't give me great confidence that people in the know weren't hanging on to it. Oh, no, I wouldn't be buying here, because this is what you want to be looking for. There, look at your little slow curve. There was your best friend breakout. It just broke out and moved up about 80%. If you're buying this one up here, you're buying it very, what do I want to say, very nimbly, that as soon as you see any selling, you close it out. But this is what we're looking for in the first place, to buy the safe trade right here so that we can take the profits once it gets up in this area. Okay, so SRPT is announcing earnings. So today is Monday. So on Wednesday afternoon, if I saw some buying, I would probably cover my short position. First of all, it's heading for the area that I suspected it to be heading toward, which is close to the 50. But if I start seeing buying down here just before earnings, I'm going to take my profits. If it bounces up and turns around, I can always reshort it. But remember, we're trying to do what the charts tell us. Now, right before earnings, if they're selling it down here, another big selling day, yeah, I'll probably hang on to the short position because they're still selling, knowing what that they're going into the earnings report. No, one is these are stochastics. One's a fast stochastics, one's a slow stochastic. They're both slow stochastics, but one's a %D and %K, and don't ask me what those mean. There's some people that trade stochastics, that when the stochastics cross in the oversold area, that's the time to buy. When the stochastics cross in the overbought area, it's time to sell. But usually what happens is that's usually about 2 or 3 days later than what the candlestick signal told us. Okay, Jim, let's go ahead and do the double line. Again, we're going to be doing a 2-day session where we go through all the details of how to use candlesticks correctly. And again, that's kind of your bread and butter for learning how to trade. Go ahead and do the second double line. UPS, not a very exciting stock to trade. As you can see, there's not any real major trend to it. You do have a gap up, but I probably wouldn't be buying it until it got through the 50. At this point, even if it does, your percent move isn't going to be all that great. So that's a long answer to say I'd probably be trading something else. RYAM, you stay long. You can still be buying this one on positive trading tomorrow, meaning above today's open. That would be a telling you the J-hook pattern's in progress. UNT, you stay long on this one. Also, with a little gap up to the breakout area, you just stay long at this point until you see a sell signal and a close back below the T-line. And HPT, you stay short. Again, with your gap down, you can see once it got to the top of the resistance level, they gapped it down. More than likely, they're bringing it down to the bottom of the channel, which if you drew a parallel line would kind of equate to the 200-day moving average. Philip Morris, nothing here to get real excited about. Number one, if you like it, you can stay long. Just watch to see what it does at the 200. Unfortunately, because Philip Morris is one of the institutional type traders, it's going to be it's not going to be a very fast moving stock. Netflix was one of those. Somebody asked when you had that big move to the upside, will it still continue? I guess it was STS to the downside. When you see these big moves to the upside, usually you're going to have that 45 degree. You're up in the overbought area. I would probably put a sell stop, just a protective stop below today's low. If it comes down in that direction, it means they're probably coming back to test the T-line area. Goog, as long as Goog is staying up, that tells you that the investor sentiment in the general market is still going to be pretty good. Facebook reached an all-time high today. Still not anything that I would trade. This is the type of thing where you have to just kind of stick it in your long-term account and just let it stay there. Hecla Mining, also, when it got up here to this resistance level, sold off. There was your left-right combo. And today it closed back below the 50. I would probably have been out of it today with the idea that it's going to be most effective coming back up when and if it comes back up through the that level, the upper resistance level. SEMP, you just stay long. It's just not a very exciting stock, but at least right now the next target should be the top of the trend channel, which would give you, it looks like potentially a 10% upside. Let's see, GGB. That is your almost your meeting line. It closed 1 penny above where it closed yesterday. If it opens lower tomorrow, take profits. That tells you they're at least bouncing back down to the T line. It needs to stay long. It needs to open positive and trade positive to stay in it. Otherwise, the sellers are now taking control. Reynolds American. There's your message. The message is a big gap up, but they immediately start selling it off. That's profit taking. Today was a bullish Rami told us the profit taking was over. Now you can start buying it on the basis that you're probably in a, whoops, I just did that one, that you're probably in a 45 degree. KKR, little scoop type pattern, left-right combo. You can buy this one on positive trading. Still not a very exciting one, but it should be able to move back up to this level. I guess that would still be about a 10% move. And CVI, nothing here yet. You're just still caught in this sideways mode. You really don't have a strong reversal signal here. Yeah, nothing here to get real excited about either. Monster, there's your hammer gap up. If this opens positive, you can be going long on this one. If you're long right now, you stay long. But if it opens lower tomorrow, remember our bobble pattern, more than likely it's going to come back down and test the T-line. Then you buy it if it comes back up above the 50. SLG, there's your belt hold, bearish engulfing. There's kind of your doji sandwich. There's your trend. So your next target is probably down here. So if you're short, you stay short. Berry Plastics Group. You can see where you're trading right here at the resistance level. You could be a buyer of this one on positive trading. If it breaks out, there's your trajectory up here in about the $52 range. FNSR, wee little kicker type signal, not very strong. The kicker signal, you usually want to have significant candles. I can't see any. But it looks like you're setting up for the J-hook type pattern. If you like this one, you can be buying. There's your first target is up here, which is 10% away. But then if you break out through there, you could have another good move. So if you're buying this one, just don't let it close back below the T-line. And Bidu, left-right combo, gap up, breaking this downward trend channel. You can be buying this one on any positive trading from here. Schnitzer, there was your belt hold. Notice what happened with your belt hold. Trading sideways, trading sideways, trading sideways, belt hold wipes out all the sellers. And notice the trajectory after that. Now you're up here in the overbought area with a doji. I'd put a sell stop down here, either at yesterday's close or which is basically today's low. To stay long, this one needs to open positive and continue positive. BVX, this one you can get ready to buy. Hope the volume is pretty good. But you can see what was happening on the pullback. Very indecisive. Now you've got that move back up above the T-line. You can be buying this one on strength. Use the T-line as your stop. And Arco gapped up today. So you can be buying this one on positive trading. There's your best friend type signal. If it opens positive, remember, they're going to move it in the direction how they open it. Verizon, I think, beat their earnings. So I don't know where it's trading. Did it pop up a little bit? Let's see. We can find out. Whoops. That was Fonty. They've already got it off. So I thought Verizon beat significantly. So that would create a, if it was gapping up here, that would be creating your kicker type signal. KONE, another one that has a hard time getting out of the trading range. So this one, after opening positive, closed more than halfway down the candle that told you the bulls are in control. I would have closed it out. You can always buy it back if the bulls step back in again. Advanced wouldn't be long or short, just moving sideways. There's nothing here to really tell you there's excessive bullish strength. NVIDIA, yeah, it has the potential of, let's make it big enough where we can draw, that it could either be this trajectory, or it could be this trajectory, which would be a substantial. So that's why we went after the weeklies. RJR, all you can do is stay long on this one, as long as it stays above the T line. AMB, this is why you stay short, as long as you don't see a buy signal and a close back up above the T line. Probably has some more downside to it. Wisdom Tree. Nothing here to get real excited about yet. It's got to get out of this sideways trading range. There's nothing here. I'd be trading something else. So stick to candles, yes. Remember, candles are nothing more than the accumulative knowledge of everybody buying and selling during a specific time frame. And it's because it's investor sentiment and investor emotions, it's probably the most accurate and consistent graphics telling you what's going on in the price move. Because investor sentiment has been the same 400 years ago as it is today, and it will be the same for the next 400 years. Fran, nothing real exciting here. If it opens positive, which it needs to, I would tell you this slow uptrend is still in progress. But probably not anything that I'd go after with any great urgency, mainly because there's too many other signals out there. Now this one is much better because of the doji gap up. This one I'd be more apt to be buying on positive trading, except the percentage move may not be all that great. ACAD, this is perfect example of if this was the signal that closed above the T line and needed to open positive and trade positive, I wouldn't have gotten into this one because after not too much time, it started trading off. So the first thing I'd watch to see if it was going to come down here and bounce off the T line and head back up. Well, it never did. Again, the same scenario on our recommendation of COLL. Maybe it was coming down to test the T line and bounce back up, but it never did. So I'd rather buy into strength after seeing a candlestick buy signal, because that's exactly what we should be anticipating after that signal, is more buying strength. Right now, after kind of your dumpling top, you stay short until you see a buy signal. And Barnes & Noble, another one that's not real exciting as far as percent return and not real exciting as far as a chart pattern. Got a lot of junk to get through. If you're buying it, you just obviously have to watch to see what it does once it gets to the first resistance levels, which is the moving averages. This one I'd be more apt to be buying. Let's see, why did that not show up? I thought I had that one written down. I did, and I missed it. This one I'd be more apt to be buying on positive trading tomorrow, because notice we've gapped up. We've gapped up again, and where do we gap up? Right into this resistance level. Let's get rid of this thing. When they're gapping up, and they know there's a resistance level here, and they're gapping up, that tells you they don't care about that resistance level. They're probably going right through. Coca-Cola. You can, Coke, I've never done anything with because, again, being such a major institutional trader, and I would not want to do anything until it got up above the 50. But right now there isn't anything, number one, in Coke that would get me real inspired unless it does get through the 50. Number two, even if it does, your percent return on Coca-Cola is going to be so minor. Yeah, you obviously have to hold this long term to get anything out of it. Hard chart to do anything with. You have your Morningstar best friend. You can be buying this one on positive trading tomorrow because that tells you the profit taking the last couple of days is over. You can be buying. At this point, I would kind of expect a 45 degree to come off of there. An AVGO, that's a good looking chart in the sense that it's trying to break out. You can be buying this one. Just use, again, the T-line as your stop. SIMO, Morningstar signal. If you're buying this one, yeah, not a very big percent move to get back up to the resistance. There's really no major trend to this one. Yeah, even if it moved back up to the top of the trend channel, that would be, maybe that'd be 10%, but that's still not one of your greatest looking charts. XIV broke out today. You can stay long on this one. If I was long, I'd have my stop at today's open. It shouldn't come back through that level, especially because of that gap up. The yen, I wouldn't be long or short. That's a lousy looking chart. Okay, 101. Okay, on Verizon. All right. And Dust should be acting well. Well. Nothing yet, but you can see how it's got this slow uptrend in progress, which means gold is probably still heading lower. United Technologies, nothing here to get excited about. Still have to break this downtrending channel. You did have a morning's or a abandoned baby down here. So I wouldn't buy it, though, until it got up through the T-line and the 200. And once again, even if it does move all the way up here, you're looking at about a 3% move. Not anything I'd get real excited about. Did ACCO and TLA. This one you can be buying. First target is probably the 50, which also corresponds with what seemed to be a support level over here. American Express, again, 45 degree after the big price move. On MasterCard, I don't know. Depends on whether yeah, that'd be iffy. I wouldn't, just because American Express acted well, I don't know whether that would be consistent with Visa or MasterCard acting well. EFS reports tomorrow. All right. Discovery. All right. You have to see is it tomorrow afternoon, see what they're doing as they go into the close. Lab D still acting well because the biotechs are still soft, but there's your J-hook pattern setup. There's your left-right combo. There's kind of your trend kicker. Notice how they opened it here and closed it here, then gapped it up the next day at or above the previous day's open and went the opposite direction. That's your kicker signal. That's usually an indication when you do a trend kicker that there's going to be more upside. AMAT, you can buy this. I'd prefer to buy this above 50 because that would tell me also they are breaking this downward trend channel. But the fact that they gapped this one up a little bit today is strong. Intel, nothing in Intel that again, Intel, like Microsoft, is one of the big institutional traders. They don't move percentage-wise very much. And right now, if you were short, you stay short. But again, your percentage return on this one's not going to be that exhilarating. AXTI, you can still buy this one on the J-hook type pattern if it opens positive tomorrow. Yes. No, I didn't. We did ACO earlier. Probably, there's your best friend. It's probably going to be a 45 degree. Philip Morris. Yeah, it could be a 45 degree. Notice what happened after it opened positive today. Went positive. So remember, it's going to move in the direction of how they open it after a doji. Okay. Kept the overtime. I guess that's it. Couple good-looking charts out there, or a few good-looking charts. CENX. Keep an eye on this one. Momo, I'm going to watch to see if this one breaks out tomorrow. And ATVI, with the doji gap up, I'd be ready to buy this one on positive trading tomorrow. Let's see, there was a couple on the short side. SPWR. SPWR, with the failure here, I would suspect they could come all the way back down here, giving you about a 25% downside. We did Netflix. I think we did Netflix. It's still in this 45 degree. Use today's low as your stop. If it comes down through there, there's probably profit taking that could bring you all the way back down to the T-line. All right, everybody, have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.